Hey everybody, it is great to have you back here for our markets and sectors class. My name is Mike Fairborn, Senior Manager here at Charles Schwab. Today, I want to look at a few different things. Jay Richardson did just note in the chat there was a little bit of a spike there from the Hindenburg Omen. We're definitely going to take a look at markets and sectors, but I also want to take a look at what is growing the fastest right now in terms of, stocks in the S&P 500. It can be an interesting way to kind of maneuver where you might go once you find a sector or industry that is showing that kind of relative strength compared to the market. So, reverting back to that, I have an interesting screen that I'd like to go through to point to specifically show where the fundamentals are pointing to not just growth, but also value. So we can kind of seam together growth at a reasonable price within these areas. It'll really help, I think, to narrow down some of the stock candidates. So I look forward to going through that with you. And here we are, folks, on the very last class of the week. And let's go ahead and welcome everybody in. Oh, I've got to just do one quick thing here. There we go. We got Cameron May in the chat as well. Thanks, Cam, for having my back in the chat. Any comments, questions, folks, you have, throw those in the chat so we can address those for you. Definitely. And hello to you, BJ, Eric, Jenny, Michelle. Welcome back. Welcome back, Jay Richardson, as well as many others in here. Scott, aloha to you, as well as David, Will. Got some sunsets coming very soon here. And Robert, many others, Life of the Fast Lane, folks. And Richard, look, let's dive into some disclosure so we can get this show on the road here. Now, the material here is intended for general information and educational purposes. Paper money software application also provided for education purposes. Investing involves risk, including for loss of principal, and for some products and strategies, more than loss of your initial investment. As you can see there, we do want to reference futures and futures options trading as it is not suitable for all investors. We do just look at the charts. We do not trade them here. We have other classes that we do look at trade examples and concepts within futures, but definitely want to look at the charts. Final disclosure slide there as we, yes, dive on into things here. And I'm actually going to start off right into this right now and just kind of highlight a few different things that we are seeing on. Oh gosh, we have the ES over here, and that's fine because we can look at those. But you know what? Let's look at the SPX for now, real quick. But you can see we've got a little bit of some some information here to kind of consider. We were up on the day on the ES or S&P 500, then we came down a little bit. As you can see, we're right holding. I mean, you couldn't script this out anymore. And I've seen this happen, folks, with what's referred to as, it is interesting. It's a fascinating concept, but this is referred to as the apex of the triangle. That's when the two trend lines converge at a specific point in time right here. Now, it is interesting because this is also known as like a tombstone doji, shooting star. A lot of times the shooting stars are noted in terms of the candlesticks when prices are going up. They'll shoot up, but it can still be quite bullish because you're breaking highs intraday, but you're testing back down. It's kind of a fascinating concept here. But what's going to happen here? The one thing we can say for certain is that there is a longer term trend that is up. We can also say that we've gone into a consolidation range and we've held a lot of those gains, right? We've held them. We haven't given, I mean, look at all this. This is all held from this area down here. Absolutely. This is area that we've held above. And a lot of times when that occurs, you might see strength. I mentioned the summer rally. Sure, we can see the summer rally come in here and potentially bolster that, but it doesn't have to. The summer rally doesn't occur. It does so happen that we do have the Straits of Hormuz. I'm watching the ships every day, counting how many go through. We've had three thus far go through today, and they were all oil tankers. But a lot of them are carrying like 2 million barrels. I don't even know how you fit 2 million barrels in a super tanker, but maybe that's why they call them super. I'm not sure. But that's very, very small. Um, Two Saudi ships were attacked in the Strait of Hormuz. What I'm getting at, folks, is this area down here that we did gain, it can be impacted. We're holding up, but it can be impacted by news events. When you get something very, very severe that happens, it can play a key role. Let me just highlight this real quick. Oil. is going to be an interesting gauge to kind of check out here. I wanted to highlight this too. Be sure and follow Cam on um, X. I'm Mike Fairborn. You know, Mike Fairborn CS. I almost said Mike F CS. That's not correct. Let me pull this up though real quick. I don't have all the drawings on here, but just to show you, this is an interesting area of resistance, perhaps potential. I'll just put R question mark using the volume profile, lining up all of that volume down here into where these trades came in, and that's a massive spike using a 6-month chart. Now, when you get into this level, you can kind of pause a little bit. It's interesting, but don't be too surprised if there's some sort. This happens a lot. I understand that on one side of this, there's a lot of sort of intent to get some agreements in place. Last time we had one of those agreements, you saw this happen. I didn't think it would go down to the pre levels of the war right over here, but oil did. I don't know, but we'll see what happens. I'm just the point I'm trying to make here, folks, is I'll pull this up if you want to check it out, but the point I am simply trying to make is that news can play a key role in what could happen here as we look back at the S&P 500. Regardless of the setup, I have put in these lines in here so you can get a general sense when we broke above, when we broke below. This gets us close to the mid-range up top here. And this puts us, interestingly enough, in terms of our triangle pattern, breakdown. If it does break down, 7K right there. That was an interesting area of resistance. The corollary to resistance can be support. Okay. I'm abbreviating everything today. Easier to do it that way, but there you go. Okay, so keep that in mind. Now, also down here, what did we get? We have an interesting little indication from McClellan right there, the McClellan oscillator. And what Mr. McClellan, by the way, and his wife, they both developed the indicator, very interesting. Noted is if you go below 100 and then back above a minus 70, which is exactly where we're at. Well, we're above it. We're minus 57. What does he say? And we've watched this happen routinely for a long time now. Nothing's perfect in the market, but two, 3 weeks of a rally or a consolidation, and we've got that. So that's kind of interesting. So McClellan says, hey, we could bounce here. And we've seen that happen frequently enough to bring it up. If we're looking over here at the summation index, it's dipping back down. It's kind of a long-term view of the McClellan, but it's still a higher low than we had over here. Now, real quick, advanced decline lines, sort of resting on a prior high. We did dip down over here, but we did come off a new high. So we're coming up a little bit today. Interesting to see. What does the trend continue to do? Does it continue to go up? Could be a very interesting thing to consider. We do know this. When we equal weight this out, well, it looks a little bit like a flag, doesn't it? It looks a little bit like a flag here, but not until it really starts to move can it be confirmed as a flag, but it's been doing this for a little bit. So more breadth in the market's positive. Now, this is what Jay Richardson was saying in the chat earlier, and noted that she's got an interesting point here, particularly if we start to break down in that triangle. You can still see the lines from the daily chart. If they go down, remember, it's this downward move plus the downward trend plus the Hindenburg-Omen spikes, which is a 52-week high and low, is what that represents. A number of 52-week new highs and 52-week new lows, a certain number where the market can break, and I have to show you all the way over here. That's what did happen here. Did we have the trend first? Remember the trend coming down? Well, there it is. Did we have the spikes representing that? We did. And look what happened. No more Hindenburg omens, but it was set in place to maybe break down, and it did. 2022 was a tough year. That was a long portion of the year, like 9 months of the year. That takes us all the way to October before it bounced a little bit there, before it rallied. So there you go. It can take time. Watch this. What's the key here? The key is this. Does it begin to break here or not? So a lot can be dependent upon that. And then I would say a lot of that could be dependent upon the news that comes out in the market. We still know here that on a big scale, look at this. I mean, that's the summer rally on average that we tend to get over 10 years on average. The 20-year, very, very similar. That takes us all the way to the end of August. You'll also get a spike at mid-August. You can see where we're at right now. Let me just take this off so you can see it on the ES, just to highlight it. But there you go, right there. So will it rally? Well, it's in that triangle, and all else equal, when you get this coiling, oftentimes, not every time, it'll break in the direction of the trend, but we've got this cloud of news that we don't know what's going to happen with. Although we can say that maybe negotiations could take place, and that could change the dynamic like it did previously. We could just state that because we saw it. Will it happen? Well, we don't know. Things can change too. They can change. It doesn't have to be that way. All right. Your equal weight, which is an additional line over here. NDXE for equal weight. Thank you to Sharon for this one. And there you go. It's just about the same. Quick note on this, just a super quick note. 20, excuse me. Ooh. This is very much a sort of what I would say is a tech-driven index, 68 plus percent technology in the NASDAQ 100 versus about 35 in the S&P. So they're very much, I mean, 68, yeah, all the techs, I mean, a lot of techs can go together. You're not going to get as much variance as you did on the SPXEW. I had shown this chart. I think this is interesting on the volume profile. Again, you can add this volume profile up top. Click up top here, volume P, everybody. Just type that in. There you get it. And you'll see this pop up. But if you go to a 6-month chart, it's just more relevant because we spent more time up top. And if you do that, look what you get. That right there is the point of control. And wow, that is a big sort of what they refer to as a volume node. It can be resistance until you get above it. And if you get above it, you could see some blue skies coming higher. And so we'll have to see what's going on there. But look what happens if you go below. It could also dip. And where does it dip to and start changing? We looked at it earlier. Look how the volume profile lines up so well with 7,000 again. See that? So these areas, these open pockets, that kind of seems like air pockets. You know, you just drop through them very, very quickly. There's not a lot of support through here. So prices could dip. And it's just a boom, boom, boom right there. Right there. So upside, same thing, but getting through here is going to be the real question. Okay, so interesting stuff. Now I'm going to take a look at our sector grids themselves, tapping into the sector because I want to spend some time going through, you know, what's growing fastest in the market right now that we can actually look at too, focus in on. Oh, let me do this as well. While I'm in here, I am gonna I'll do one quick thing. There we Okay, there we have it. And I think we're all set in the chat. Perfect. All right, everybody, let's continue on. Now, just looking at the 11 sectors within the S&P 500, seeing where we're showing some potential indications of movement. Well, you can see over here, oil, clearly energy. Look at that upward move. Could there be a cup and handle there? We did break above the prior highs. That is fairly interesting. Communication services, ooh, that's Google right there, breaking down. Infotech, long consolidation here. Looks a lot like SPX, right? Look at it right down here. Very, very similar to it. So you'd have to say like Mag 7's been mentioned about 47% of the moves of the S&P have been tied to the Mag 7. It's a market weighted. So there you go. If this starts to break out, it probably has a follow through within the S&P 500. I mean, it can. It could be a likely scenario, perhaps. Here is healthcare flagging right there. Okay. Financials also quite strong right over here as well. Kind of a sideways move. So it's a good gauge. And look at industrial. So we're getting just a starting point on some of these, just getting going. You can see it right down here with real estate, one we don't go into too often, but it's very clear at the bottom there. Look at real estate right there. Look at that. Just breaking above a range. Now, these are generally like REITs. So a quick note on REITs. Investing in REITs may pose additional risks such as uh, real estate industry risk, interest rate risk, and liquidity risk. So keep that in mind. But might I just state this? This move right there, if this is your kind of a flag pattern, think about this extending to the upper range as well. So park that in your mind. It is a breakout over this range, and we've been breaking out for a little bit. In fact, we broke out and came right down there. The biggest one in this group would be, by the way, how are they doing relatively speaking on the week? My guess is pretty decent. Yeah, look at this. Is we're doing a sector rotate, looking for sector rotation strength using a relative strength. Look at that. Industrials as well. Thursday, financials, just the ones we just hit. You got materials too. Healthcare was one. This is not great. Technology is not great. Neither is discretionary. Utilities as well. Look at that. Even some of the staples are coming around. There we go on our tic-tac-toe, right? Screen there. X's and O's, but there you have it. This is sort of what, so we're seeing sector rotation right now. What's interesting is if the markets do go down, we could sometimes anticipate, because sector rotation is a real thing, these areas might go higher. So which ones here are growing fastest? We want to take a look at it and just see where the earnings growth is right now in the S&P 500, because a lot of times that's where institutional money, smart money heads, and we want to be kind of ahead of that a little bit. But I want to type in here. I just want to show you one of these REITs. We've already read that disclosure. Simon Property Group, SPG, one of the bigger ones out there. Okay, there you have it. So the REIT, we saw what the REITs look like over here, very similar. I'd say a little bit stronger on SPG. Here's your move up, little flag, possibly little flag right there as well. There is earnings coming up, but hey, that's real estate. See what happens. These guys, remember with REITs, they do tend to pay a little bit more income, all else equal. I mean, all else equal, that is, but that's about a 4% yield right there, regardless of this rallying up to higher levels. It's still close to 4%. What are the yields? Hang on a second. Aren't yields close to that? 10Y? Isn't it 10Y? Yeah. The micro of the yields. Yeah, it's a little over 4%, but it's kind of comparable, right? To bond futures there. A little side note. All right, well, let's do this. I want to look and utilize Schwab over here, and I'm going to use this to help us out in building a uh, a search right now, a screen, so that we can really narrow down and see some of these companies that are actually showing us some of the fundamentals. We want to see them showing it. So what I'm going to do right now is I'm going to go into research here and right into the stock screener. Now, within the stock screener, I am going to build this up based on the S&P. We were just looking at the S&P. We're going to keep looking at the S&P, but we want to look under the hood. We want to see which of these companies might be showing the strength that really we're after, that could justify possible institutional money going into it, smart money, rotational funds switching from technology if we do go down, or technology companies that are maybe growing, but also at a reasonable price. What's out there? We're going to find out right now using a screen like this. Here's the S&P 500. Now, I'm going to simply just go down here into the price performance, and I want to go in and look at the growth history first. A lot of analysts will use a 3-year. I'm just going to start off with a really, really low number. We can always tighten this up if we wanted to, but I did want to go to a 10, a 10. So it has, in other words, it has a history of growth. Why is that important? If they have been doing it there's a timeline. If they've been doing it over the past 3 years and growing consistently at that rate, and we've got on average, on average, they've been growing at that rate or higher, right? It's greater than or equal to 181, still a big number. If they've been doing that for 3 years and we're looking at this level here, and we start to look at projected numbers here, projected EPS from the analysts, if they suggest 10% uh, earnings or higher going forward, a lot of individuals, that's a G. I just noticed. Yeah, it's a J. We're looking at a J here. Projected numbers means it might happen, might not happen. But if we say going forward, if they've had the history of delivering results, a lot of traders will, and investors will say it's more likely if I see an earnings per share at 10 or higher that they can do it again. So we do want to look at that going forward. There's a great criteria here for this, and that's going to be next year, current fiscal year. So it's next year's growth because we're already through halfway of the year. If we do that, then we want to look to the next year in a lot of cases. And this is where analysts are very, very active. I'm just going to do this and just say, get me at least 10% again, right there. Okay, now look at this. I'm going to look at something else in just a second here. But next year's growth, you got about 104. That's a lot of companies in here. If we use a true growth figure, 15. So when you hear 15 and when analysts say 15, a lot of times that simply just means, by definition, 15 or higher is often categorized as a growth type stock. It's a frequent benchmark that's used. It's not used by every analyst, but it is used frequently enough by some. So I just want to throw that out there. So there is that growth. Okay. Now, with that, I'm going to run it. Let's just see what we've got. We'll run it right now. This is historical growth. This is projected growth. And I want to know how that's just going to fit in to our list of companies over here that we can really tap into for really strong growth, growth potential. Where was that? Right here. Okay. So we're going to be looking in these different categories for something that actually can show strength, particularly around earnings, which can be very important as well. So with that, let's get back to it. Got too many tabs open right now, but I think it's right there. Where are you? There it is. Let's click on it. This is what we've got. AMD, APH, ANET's in there as well. Broadcom. You recognize a lot of these names. Delta Airlines along these lines here. GE. Wow, okay. Some interesting ones in here. Now, if I use one comparable in here, because we're seeing some of these, and if we look at them as I come through here, NVIDIA's in here too. So an example, just to look at one here, NVIDIA. We've got the growth rates right there. 205% over the last 3 years, but expected to grow at least 42.9 going forward. We jumped up a lot. We've been sideways. But what about the value of NVIDIA too? This is referred to, there's a key concept here. It's just simply referred to as growth at a reasonable price. And what does that mean? Okay. One thing we can do is we can look and just see what people are paying for the price to earnings right now. That's not part of what we're after, but it's one way to kind of narrow this group down so that we have components of both growth and value combined together. If it's going to run, that kind of captures both elements of a lot of institutions, right? I mean, they're looking at growth and value, maybe just strong growth, but if you get those that are looking for value as well, you can get both sides kind of focusing in on an area here. Here is NVIDIA. By the way, here is also one that's in here, Amphenol coming on down. It broke above a high range. It does have earnings. It's been volatile, holding, around that 150 level. Kind of interesting. Look at this. High, 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 high. We broke up for a little bit. That's a lot of touch points coming back down here. Okay. Want to look at that one. Want to look at NVIDIA as well. We did a sample swing trade on this, but we're still holding flat. You'll notice over here on a daily chart, shoulder, head, shoulder, question mark, right around another big number, 200. Now, what does it have to do? It's got to break above this high to really get that head and shoulder going. But if it does, the measurement could take us about to that level. So that's interesting too. But do we have any other drivers in here? Is there a value driver that could be attractive to maybe some of the big participants in the market out there? Well, that's what we want to add to this. And the first thing I want to do is add in a PE ratio so we can track this down. Valuation, right up top. Any PE ratio, I just want to throw it on there so we have it. And there are your PE ratios. Now I'm going to go and sort this out. And what I was going to show first is just generally PE ratios. I'm going to give you guys something that I've seen over the years. Now, it's a benchmark, and that just means that a lot of traders can use it. I'm just showing you something, historically that has a tendency to pop up, and that's this. If we are using a PE ratio, and you go back and you watch where a lot of, what do we look at here? Growth stocks. Those companies are actually growing by definition. What did we say? 15+% a year, right? And that's the expectation here as well. Okay. Uh, on this particular search. So if we have this kind of a growth rate going forward, okay, we're defining growth. But when you have this growth, these PEs, they can bottom around 20 to about 30. Okay. It's not a guarantee. It's just something a lot of analysts will talk about. I've seen that myself. That'll kind of be, that's kind of like the value range without using anything else. First, I've got another way to look at it, but is it trading here? It could be a little bit lower too, but this is a lot of times where they bottom. They can bounce or they just become very favorable and they can move up higher. So what I'm going to do is this. I'm going to come over here and I'm going to adjust this, but I'm going to cap it around 35. I'm going to give it a little bit of room on the upside, just above 30, but I'm going to leave it down below to a lower level too. In fact, I'm just going to say above this level. So watch this. I'm going to go right back into my price to earnings, enter specific values. I'm going to say between, uh, or let's put it this way. I want to do less than or equal to 35. Okay. 23 is all that comes out of this group right here. So 23 of that group we just looked at. So there you go. So these are 23 companies. Let's just look at a few of these names. Let's explore and see what's going on with these companies as well. But if you come down here, so you still have NVIDIA. What's that? Like right around that. So 30, it's getting close to that 30 level, is it not? It's not a guarantee it's going to move. It's just a benchmark that some traders will use. And you can imagine that. I mean, if it's growing, what was the growth rate over here expected next year? Whoa. Okay. So if you've got, I mean, um, a PE ratio of roughly 32, but you're growing at like 40 on it's approximate 43, approximate here. That's approximate 32. But if you're growing there, my gosh, what do you have? You've got your PE ratio lower, whoa, than your expected growth rate. That's a definition of what a lot of traders would say. That is a value type definition. But we've already accomplished one important thing too, growth. How do we know it's growth? How do we know though? We know it's growth because we can see it, 42.9 expected, and we can see also has a history of growth. But how do we know that that's a decent value at that price? Right over here. I just gave the ratio. That's going to be, folks, less than one. So that's a way to pinpoint looking at the chart to just say, well, I mean, now you're getting a sense that there is a value component here too. Does that mean it's going to run? Doesn't have to, but we're doing a little bit more here to kind of narrow down if tech were to actually go. And by the way, you can see what's happened with this. This is really fascinating. Prices have actually gone up and consolidated and gone up and held at a higher low. Now, I realize this is dragged for a long, long time, but the value is interesting here because we've seen the Nasdaq dip, 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 S&P dip over this time frame, but not this one. You might find that characteristic popping up through here. We have a healthcare one as well, Gilead. That's kind of like I don't know what's going on there. That might be a number that's off, but it is, yeah, technically that's above 15. You could say that, yeah, I want to look at Gilead as well. We saw healthcare. I also want to look at like what is this, CMG? Oh, but Gilead first. Fascinating group to kind of go through and take a look at. Pretty strong move on Gilead. You can see us coming down here with a little bit of a cup and handle, and we're holding that range. Now, earnings could play a key role in here. Do we have anything interesting here with earnings? Well, we just looked at projected earnings, and we looked at prior earnings, and we looked at the PE ratio. So there might be some things, and that's what analysts do. They look behind the scenes to give them kind of an idea of where earnings might go. That's your weekly chart right there. Not there, right there. Kind of a long consolidation. This has been a little bit of a history of an upward move after longer consolidation. So could help to narrow this down a little bit. You guys are seeing that? Yeah, CMG, I want to look at that one. I want to look at Insight as well. That's another healthcare company. T-Mobile. Interesting. Okay. MasterCard. Okay, so let's look at some of these here. T-Mobile. Ooh, not good earnings there. Of course, it's bouncing back up today. I don't know. Maybe was it a missed number or something? It dipped all the way back down to 170. Looks like they beat expectations. Not sure what was going on over there. CMG was in this list as well. Kind of a little bit lower value. That's more of the discretionary, which wasn't doing really great. Oh, SMCI. Oh, interesting. SMCI. Okay, I just say interesting because this too is semiconductor, and we've just come down here. Are we bouncing, coming up? Of course, earnings is still here. Want to look at that as well. VMC. Okay. In this range, quick look at the weekly on this as well. Been consolidating for a little bit here, but that is, yeah. So maybe a double bottom up top, new high, question mark. There's still earnings to kind of look at over here. Folks, this can be very, very helpful. Again, this was the criteria. Let's look at MasterCard as well, but up top here, this is that criteria. Has it done it in the past? It's all logical. Is it expected to do it in the future? Sticking to growth. And what about the PE ratio? Does it make sense? Using fundamentals, it can help to put structure into that trend. And I'm talking the stock trend too. Because ultimately, what traders are looking for, investors, they want to see earnings. Also, let's use a different line. Earnings going higher, generally speaking, earnings going higher at the same time the stock price is. That's what they're looking for, are those types of connections. So it's an interesting screen right here that you can save. I do have a growth value and income. I've added income to one of these before, but I can save this and just have it in here. Just in a moment, I can click on it each and every week and just see what pops up. But yeah, a lot of times you'll see these stocks and they can be very strong for a long period of time because they have growth associated with them. But that's tapping into the fundamentals, really growth at a reasonable price. Wanted to kind of finish up on my MasterCard here. Now, look at that pattern. Of course, we're in earnings, so be mindful of earnings. But look over here. Cup and handle starting to move out of its range. We don't know if it'll continue, but it is starting to move out. And look up top here. If I were to go out, actually do a 2 year to kind of look at this, we've been down for a little bit, but that's actually a very, very sharp move coming out. Folks, you have the data right there at your fingertips, right there, now that you've got it. So there it is, 17% historical growth over the last 3 years on average, very close to 16% PE ratio. Where's it at? This is defined as growth, right around 30. Okay. Some are less than 30, but that puts it into the range. So you can kind of get a general idea where many of these might bottom. In other words, it might have a value component to it that could be attractive as well to help those prices continue on up. So I really wanted today, and we're going to continue to do these kinds of searches and screens to tie in because I think it's really helpful to have. I mean, from my perspective, it definitely is when we're looking at sectors. We come in here each week and we look at a sector. There's our sector grid. We take a look at it. You know, it's helpful to find out the companies within here that do have fundamentals that can increase. When we're seeing companies like in tech that are going up, folks, these are almost very, very frequently, they are all involved with growth. And many of them towards the bottom here fall into that PE kind of ratio. All we're simply doing is we're trying to spot companies that might fall into this category that are maybe ready over here that could really have a big, big move. But we had low. I mean, remember this consolidation over here? We had low PEs over here, right into that 20 to 30 range, 20 to 35 with growth. Those were many, many of those movers. So a lot of information today. Sorry about the data dump, but I wanted to get this out to you just so you have a search like this that you can utilize around those times when a turning point might occur. There was more than just I mean, there are other companies in here that you can really kind of take a look at. What's fun is looking at it every week, though, and seeing what's growing. Especially if, let's say, healthcare starts to break out, at least just look at what's growing and then compare the PE ratio to it. All right. But yeah, there were a few in here, right? SMCI on the growth or the tech side, SMCI. You had well, Nvidia uh, and others within tech. My Mastercard's almost like fintech in a lot of ways now. Everybody, hey, smash that like button if you found this information valuable today. Love to see you use tap into those fundamentals going forward, though, so that you can have that to utilize going forward. And let's see, how are we doing here? Okay, I think we're all just about set. Um, where am I? Let me just double check one thing here. Got it up and going. Everybody, yeah, be sure to subscribe to our Trader Talk channel as well. You can follow Cam and I on X. Love to have you there. And with that, everybody, it is time for a weekend, and I will look forward to future discussions with you all going forward. But quick note, I think there was a survey. Was there a survey link in the chat? Yes, there was. I think there was a survey link. Get a chance to fill that out. That would be great. Just a couple questions there. Liked it, hated it. Love to hear your feedback on that. Everybody, have a fantastic weekend. Look forward to it. I'm going to go out and hit some bike rides pretty quick here. Hope you have a great weekend, though. We'll see y'all.